The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. What do we have going on? Well, Janet Yellen is about 25 minutes away from yakking, and as always, we have her theme song.
You talk too much, you worry me to death. You talk too much, you even worry my pet. You just talk.
Yeah, she talks too much. The S&P's flat, 1 point up, and it's bouncing around here. Not a lot of movement in that. Certainly, there was one line out there where they've moved the rate hikes from 2 to 3, and that kind of spiked the dollar. And we'll see how that actually comes back in. Right now, a lot of indecision about what's going on. And, of course, she will be talking at 2:30. That normally runs till about 3:15. And we've got a few other things going on at the same time. But as always, we like to come to you at when the big hand hits the 2.
The following takes place between 2 p.m. and 3 p.m.
So what else is happening? Well, we'll have to see. It's kind of bouncing around. There wasn't a lot of juice in this market to begin with. Normally, you want to hear what she has to say, and some of the questions are going to be asked. I don't think she's going to say a lot. So probably a lot of back and fill for a little while out here, kind of a spike up, a point in the S&P, a spike lower in the S&P. Volume is lighter, much lighter than yesterday, about 300 million shares, 2.2 billion shares as we start the show. Not uncommon for a day like this. And, of course, we got other people getting ready to talk in a couple of hours, too, in technology. We will talk about that in the coming minutes. But right now, kind of a big nothing burger. And kind of back to where maybe just a little higher than we were right when the net message came out. The thing's going to be, don't like that extra rate hike, but maybe that means the economy's getting a little better and the economy can help it. I suspect that they're going to want to try to keep this market down for a little while. They don't want to kill it, but they do want it to have at least that 26 PE, probably get down to 18 or 15. And the question is, how will they do that so that the stock market does not blow up as it has so many times before? As always, we'd like to start off the show with a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1799, a major landholder and promoter of the Western settlement, George Washington, dies on this day in 1799 at Mount Vernon home along the banks of the Potomac. I've been to his home, and it's he wasn't there, of course. He'd left in 1799. But a very interesting guy, and I think sometimes it just takes one person to set a excellent example, and we had it in him. They offered him the ability to be king of a new nation, and he basically said, nah, we're trying to get rid of a king. We don't want another king. We don't want a dictator. We don't want somebody that wants to molest the Constitution, although we have that today. But it is what it is. But a wise man, not caught up in his own ego, was willing to say, you know what? I don't have to be a king. We're going to have kind of a king for 4 years. But even then, he's going to have severely limited powers. And we'll just continue to keep an eye on that. But, man, we had some really great founding fathers. And they set up a fairly good system out there to take care of us these low 220 years later. What else is going on? As we said, have the tech summit going on. I had the TV on in the background. I was watching the proverbial camera that is pointed at the elevators going up to the Trump floor, penthouse in the Trump building. And not a lot coming out, but my guess is we're probably going to see at least probably some news and discussions probably in the 4 o'clock hour. So I'm going to assume that from what I've heard in the news that this is going to happen after hours. So you may have some movement in that NASDAQ indexes after hours once a few of these folks come out. From Tim Cook to Larry Page, Eric Schmidt, Sheryl Sandberg, Jeff Bezos, Satya Nadella, and Chuck Robbins, Jenny Romedy, Brian Krantz, and Safra Katz. I can just say her name all day long. Just rolls out the door. Safra Katz. Anyway, what else do we have going on? TripAdvisor. There was kind of a very interesting article about TripAdvisor's actually being used to blackmail owners into giving refunds over unfair complaints. From the South Park episode where everybody became a critic, a food critic, and tried to get free food from people. This is a constant in this marketplace of the internet, and that is what can you believe, who can you believe, and just because now everybody has the ability to get a big megaphone, does that mean that businesses are on the short end of the stick when people just decide to say that I'm going to go out there and act like a dummy and not be true? Now, I can imagine there's some places and issues where this would be true, but from Yelp being used to destroy competitors to others, the ability to actually put proper weight on a single person and have them not extort an action out of an owner is fairly weird. And that continues to be a problem in all of technology. The Amazon folks had a book out by somebody that people didn't like, so they posted all kinds of rather dubious book critiques. They just went ahead and wholesale got rid of them, which is probably not the correct thing to do. But at this point, no one really has a good idea or handle on how to put weight and or police the internet in a way that always allows people to get the correct information and not incorrect information. But from Yelp to others, you know, some of these just attract these kind of folks, and TripAdvisor seems to have that. A lot of people are just being going to places, telling people it was horrible and getting the refunds, and it's the same people over and over again. But what do you do? What will you do? I don't know, but that's the kind of thing that needs to get taken care of before you become a public company, not after. No one listens to me that much. But, we'll be back shortly, off about 6 points on the S&P cash right now. Yes, we will. Got a request. We'll look at see how options are looking for this expiration cycle.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And what do we have going on out here? Well, we're still kind of selling off a little bit, off 5 points in the S&P cash. Good question in the den. Friday is expiration. Some folks want to buy stocks with 52-week lows for a bounce in January and February. Any thoughts? And there is a lot of work that's been done in academia about reversion to the mean and finding stocks that are pretty good deals and finding what they call in Wall Street fallen angels. There is a certain amount of folks that do buy those come the end of the year, and if they just figure that everybody's continued to sell them and get a good bounce in January and February, that's the reversion to the mean trade. And there is something to it. I haven't studied it extensively. I've read several white papers about it. A lot of times, since the data for the stock market is so easy to get, it's kind of the go-to thing for people that have never traded before, especially writing PhDs. Easy data to get. And so you get a lot of papers where people do study these phenomena and do kind of put some statistical calipers on it. That is one. So there is something to it. Enough people have looked at it. I haven't really spent a lot of time on it. The question wouldn't be whether or not you get a bounce. The question would be how big the bounce is, and if there's any way you can find the stocks with the best bounces coming on now. Now, the question is whether or not they buy them between now and the end of the year, if they buy them on January 3rd. And that's another thing that you would want to study and take a look at for 52-week highs and lows. And this is the kind of stuff I'm going to be doing in the next 2 weeks as I am off on vacation. I'm got a system now set up where I can answer a lot of these questions. It's taken probably a year to build my own system for testing these things and learning the language of doing it and a lot of programming it. But we'll have some new stuff. One of the new things that I've done, and you'll be able to get on Monday, is version 2.0 of the art of timing the trade charts software. A great deal right now because guess what? If you've ever thought about getting the art of timing the trade charts software, well, this is the time to do it because you can pick up some of those Tiger dollars and use it. And if you don't use those Tiger dollars on the charts software that I use here every day, you can always and also use it for my daily newsletter, The Path of Least Resistance, or my longer-term newsletter, which is the Tech Insider, for investing in technology. This has been kind of a tough year to invest in technology. We've had some shorter-term trades. I keep on wanting to look at some of these longer-term ones, but man, at a PE at 26, generally not the time to go out there and do some long-term trading. We'll see. I think next year, I would love to have a year of a pullback, make a lot of money on the short side, and then get ready for the next move up, which I think is what's going to happen next year. Anyway, reversion to the mean is a big deal. We also have some interesting data coming in from what option market makers are looking at. They are thinking that we probably do not go any higher than on Friday than we've been here today. And more likely, they are thinking that we could have some significant downside. Why, when you look at the SPYs and you look at it historically, you want, like on the SPYs, wherever the options are pointing to, you want to give it a little bit of upside. It's always a little bit lower. The options point a little bit lower on average of where it would be out. So could I be real surprised that this thing closed at 224 or 223 above this 220 that it's pointing out, or 225? It would not be surprised me. The bias is what you really want to look at, and the bias is to the downside out here. Every point in the SPYs is about $1 billion to option market makers, and that tells me that there's a little bit more that they have going on out here to push this market down. Like I said, every point in the SPY by Friday puts another $1 billion in the pockets for people who actually wrote those options. So there is a bias to it. That's why I kind of think, we've said it last few days, that I could see a push down. Am I expecting us to hit 220? Probably not, but that is the bias. At worst, you would want to be thinking that we don't go any higher and we just go sideways. At best, maybe that 220, we find something out. I just don't see in December where you get that much bite into it or anything that could actually move the market that hard. But we're starting a little bit today, off 6 points, and we'll continue on that. Again, you can email me at path@tfnn.com. You can call at 877-927-6648. And you can also post a message in the den like others have, and I'll try to answer it as soon as possible. And yes, I got an email here already that asked me about what happened. I don't know. I mean, everybody went absolutely bonkers last week. I didn't see that we could get yet another 50 or 60 points higher in the S&P before Friday of this week, and then 150 points higher than that for February. That kind of evaporated and melted as quick as ice cream on Georgia asphalt in July. But man, where everybody, I don't know, I had never seen people that incredibly bullish in options as we were on Friday of last week. And that's when or Thursday of last week. And that's where I had my discourse where I said, when everybody's on one side and, maybe it's time to take a little bit of time and reflect. I think everybody started to after that day. But, man, this is the biggest move in options without some really precipitative event that I've seen since I've been following these things since 2003. So a pretty big deal out here, but just looks like maybe we could kind of melt into Friday's close out here. We're off 8 points on the S&P cash volumes, 2.5 billion shares as we speak. The Boeing company, I thought that maybe there was something going on out here with this one. It did gap down today. We're going to look at some of the other stocks that are gapping also, and take a quick look at them. Duke, DUK, Duke Energy, gapped up. It has rolled south out here. Dynegy also was kind of looking that way. Let's get a little bit closer time frame out here. It kind of gapped up. Never really got much going on out here. NVIDIA is the big winner. This thing moved up and on higher volume to 97.11, right back up to its resistance level. Certainly looks like it's got the volume to break out. Again, you do not want to be short stocks that have hit $90. They are going to 185% of the time. And, you know, I actually did some research. It doesn't really matter if they hit 90, even in a down market, they go to 100. That's still like 78% of the time. So this is one of the things where the last $10, $90 is a big deal.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll go through a few of these other ones out here. FFIX, I think, is it. No, that isn't it. FFIV. That it? Yeah. Hitting a new high out here, at least going through the November 18th high at 144.28 is F5 Networks, FFIV. You got, I think, all the volume you need out here. It did have a nice gap up. And, you know, some of these things, if you watch these things and they fail in the next day or two, then that's fairly bearish. If they can hold up, that will be interesting. Also gapping up at least to resistance is on semiconductor. ON is the symbol on this one, hitting about the $12 area. We continue to kind of sell off. We're off 11, and we'll call it 12 points now in the S&P cash. Volume picking up a little bit now at 2.6 billion shares. But we continue to look at it. Had a question in the den about my option calculator. And what it does is it looks at how much money on both sides of the calls and the puts, and where the 0 point of how much money would be made on either side. The idea is that 85% of options go unexercised at the end of when they're out there. So if you look at that, you will generally find, well, at least close to where the most amount of money is going to be lost by everybody that buys puts and calls. You can kind of project where the market will go. Now, the problem is everybody just thinks this is a 100% kind of thing, and it's not. You have to really look at these. I've had a webinar on it, but you want to know that this is much more like a weather report, where this thing is going to probably have a 50-50 chance, a 70-30 chance, 10% chance of rain, that kind of stuff. And a lot of other factors go in on this. I've been doing this since, like I said, 2003. I wrote an article about it in Stocks and Commodities magazine, which I do have, by the way, if you want to read my original article that's now 13 years old. Email me at path@tfnn.com, and I'll send you the PDF of it. Some of the stuff I've been working on has changed, but it gives you a good indication at least where the market makers think that the market is going. And again, these things track in. I do it in my article, but let's say that we're up here at 227 this morning, and you look at the projection at 220. What you kind of do is see that as each day goes along, the projection tends to go a little higher, and the actual SPYs go a little lower. They kind of meet somewhere in the middle, and that's why I say this thing is more of a bias issue, and it's more of a thing that you want to look at it as the weather report. Sometimes if you're way, way far away, then, if they say that there's 200% chance of rain, you're probably thinking that there's a little problem with that, because, of course, there can't be any more than 100% chance of rain. So you have to, when these things are way, way off, and that's why I brought this up last week on Thursday, that it was time to pause and reflect and look at this market. Is the market weak? No. Will it become weak? No. Could you have one day where we're down 30 points in the S&P cash? The answer is yes. Are we going to get that? We're going lower. Do you get the 30 points? I don't know. This is a very tough time of the year to be short. I do think we're going lower. We got a little taste of that today. Could we expire at 240 or 250 or 2250 on the S&P cash? The answer is certainly yes. Volume is kind of picking up 2.5 billion shares. Anyway, some people ask me where you can get a chart like that. Mine, I wrote myself. And because I use my own data, there's not an easy way to turn around and let other people use it. But I would say if you just Google Max Pain, you'll get a little bit of that. If you email me, I'll be glad to send you my article from Stocks and Commodities back in 2004 about doing it. But it's a real kind of wisdom of crowds kind of thing. But what I'm going to have to tell you is that you don't just pick it up and use it in one day. It took me probably a good year of watching how markets use that and writing my own software that's a little better than the Max Pain kind of things that you find on the web. Other indication out here, let's take a quick look. Wanted to see how some of these other stocks are doing, especially some of these out here that popped high yesterday. Little doji on Microsoft. Again, going to probably have a little bit of news after the bell today on that. So that was gapping up. Let's look at the percenter decliners out here, and we have kind of a theme. ABM Industries down fairly hard, got down to $38.52 today, opened lower, continued lower, had a lot of volume. It's getting ready to go down to the $38 and maybe $37.60 level for ABM. CVI, another one that kind of gapped a little bit lower and continued to sell off today. This is CVR Energy. CVI is the symbol on that one. CVRR, which is CVR Refining, is kind of pulled down a little bit. This did get back down to its gap that came on the 8th with volume. This has not got volume out here, so that would be one that I'd want to watch today for maybe a bounce in the next couple of days if that continues up. Eaglet, EGLT, this one's coming back to its $6.62 low. Volume is higher out here today. It got back some of that, but you have to look for a test of 662 on that one. First, NBC Bank Holding Company down on fairly stronger volume today, and suggests that you're going to go back down to the $5.55 level, but $7 is the first test. HOS, which is Hornbeck Offshore Services, opened a little lower, continued to sell off most of the day. This Macro Genetics is a pharma company, sold off pretty hard and with volume back down to this $19 level. Noble Corporation, NE is the symbol on this one, another one that gapped down just a little bit but continued selling off throughout the day, even on a market that was headed sideways. Not a lot of volume on this one. Support comes in at about 640 to 620. That could possibly line up here in the next couple of days. So if you're looking for some plays like that. Rockwell Medical, and down a little bit, no big deal there. This one is the one I'm looking at, Sherpa Therapeutics. You had this is a beautiful Wyckoff pattern setting up. We have Ben from Tallahassee. How you doing, Ben?
Excellent, Dave. How are you doing?
Fantastic.
Great. So I was just watching my phone today, and I was a little confused on watching the TVIX and UVXY staying in the red. As the whole market was coming down. Any thoughts on that? Am I missing something?
Yes. You have to understand that this is a moving average of two different time frames of futures. Can you hang on? We'll explain this in a minute.
Great.
A lot of people very confused about what the VIX is and what this product is. And we'll talk about this because it is very interesting. We always have new listeners that need to know. Inquiring minds need to know. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're on the line with Ben from Tallahassee. Did you make it through the commercial break?
I did, Dave. Yeah,
okay.
I've been trading for a while, and I have to admit this is one of those days I am confused, and be greatly appreciated if you can explain how those are read on a day like today. That'd be fantastic.
Okay, there is a period of time where especially the UVXY will act kind of weird, and you go, "Wow, this is kind of strange." And there is a reason why. First of all, the UVXY and VIX used to have different oscillator values. There is a average of the out of the money puts and calls for the VIX on 2 different time frames. One's 15 days and the other one's 24 days now, or 26. I'll have to go back and look at it. I had to go reprogram my whole model because they changed it. It used to be something like 36 days and 16 days, and it was too violent, so they moved it a little closer out there. But it is an oscillator of those two, of just out of the money puts and calls. So whatever the cost of the premium is on the S&P, right?
Got it.
So what happens is you've got the far one out there, which is in excess of the shorter one at 15 days. You got the 24-day. So what's going to happen in the next week or 14 days out here? And that is going to be volume is going to decrease, the market's going to go sideways, and everybody knows it. So you got the long end of that stick out there. The premiums just continue and will continue, even if the market goes lower, to go ahead and melt away, because you're not getting anything on that long part of the stick, right? You're basically playing the VIX for the next 4 days, maybe, or 5 days, if you're lucky, and then that's it, and then you go out there. So normally, if you can get a big high VIX, this is a great time to sell a put call, right, and watch the premiums just melt, and you collect money. Most of the year, I want to find mispriced options and buy them. This is the one time where you want to own them and watch them decay down to nothing. And the people that hold them, then just kind of like a dead fish. It's just going to smell, and it's going to be worse each day. So you've got
as you get closer to the strike. Right.
Yeah, the problem is you don't have a VIX product that really just looks in the next couple of days. I think you got the VXX, which should be a little bit closer to that. And probably if you're doing anything now with that, you have to. But even then, everybody is selling.
To be honest with you, I'm not doing anything with it. I was just more curious than anything what was going on. Yeah.
That's you. A lot of people, including a lot of people I know, are extremely confused about what it actually is. They have a white paper on this CBOE about it, and I recommend anybody that trades it.
It's really 100% options related, then, isn't it?
It's not just the options; it's only premium, right?
Oh, I see. Right. Yeah.
It's only premium because they don't use in-the-money options at whatsoever, whatever the premium is on each other side. And then, of course, you've got this.
Yeah, and then what do they? How do they always use the third week then, as far as what the week of the options, or how do they determine
it
which
has to be.
options
It has to be so many days out. So it's a minimum. It's a minimum of so many days out. And that's what I was going to say. I used to spat it off left and right, but they've changed it. So I'm not going to say something wrong out there, but it's in the white paper. But it got changed. But there's always this rollover. And the answer is no. The VIX is not, this Friday's expiration is not in that number. So you're already looking at whatever it is, 14 days from now. So probably the options at the end of the month. And then the ones would be probably something like the options expiring on the S&Ps mid-January, right?
Right.
Early January, the 10th or something. I have a model, so I don't look at it anymore. I programmed it all so I could forget it. So that's one of the reasons why. But I go in there and I look at and download the data and then look at the premiums on that side and see what they're looking at. But it's, you also have not just now, but you will have in the future times when that activity happens just like it's happening now. And it almost always is some kind of contagion where the front and the back are not lining up. And it's for some reason. You're going into a 3-day weekend. You're going on to Christmas break. You're, everybody's waiting for the Fed announcement from 7 days now. And they don't think the market's going to move at all. So you'll see that collapse maybe in the long or maybe in the short. Maybe the short one expires before the next FOMC announcement. So no one's expecting a lot of movement, but the long one does. And suddenly you've got all this premium on the long side of that oscillator. And that's it, because it is a moving oscillator of those two different time frames of just the premiums. And that really does offer some really great opportunities. I don't think a lot of people have figured it out, but that's why I built a model to go back and say, okay, this is way stretched out here. Either they're asking too much for the long term, or they're asking too little for the short term version of that. So there is a place where you can almost buy the UVXY and see it not move at all, even if the market moves down. And that's when I try to buy it, right? Because the thing can blow up in your face in a day. But I tend to buy it. I haven't had a good opportunity. I don't know. Can't even remember. Maybe it was in September when I bought it last. But I have to wait until my back is against the wall to buy it, because if you're wrong, you end up losing a lot. I've been able to buy it many times, and even in a market that didn't really do well, be able to hold it for a while, even if the market wasn't moving my way. But it takes a little bit of work, and it's more of a mathematical effort than one of sitting there and going, I believe it this way. It's just you buy it. You can only buy it when your back is absolutely against the wall for those leverage products like the UVXY. But most people don't think about it. They just go, I looked at it for the last 2 years. It decays. You can't buy it. It's a horrible product. And the answer is, if you hold it long enough, yes, it will blow up in your hand. But there are a very certain amount of times, if you work out the mathematics on it, your back will be against the wall. And like it's not going up now, it won't go down later. And that's why when it won't go down is when I like to buy it. Because then I can get lucky, right? Yeah. Okay. Anything else?
No, that's great stuff. So I'm going to definitely research the time frames on those option contracts.
It's in the white paper. In fact, if you email me, I'll find the link to it. But it's on the CBOE website, and they had the old one and the new one, and the new one actually is less volatile than the old one. So a lot of people are still using 5 years to go back and look and see how the UVXY worked.
Mm-hmm.
But the problem is you're looking at two different versions of that UVXY. So you don't want to look anything. I think they changed it, a year and a half ago now? I'll have to go back and look.
I didn't even know they changed it.
Huh?
I didn't even know they changed it. So
yeah, they brought in it used to be like 36 days out.
Got it.
Or 40 days out, 45 days out. We'll talk to you later.
Okay,
Thanks.
great stuff.
Bye.
Thanks a lot.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And just to wrap up that conversation, if you're looking for it, I have the link to it. It's at CBOE. So you can email me at path@tfnn.com. I'll send you this link. But here's the white paper that you need to read on the VIX if you do want to trade it. And I actually have the important bits that I pulled out here during the break. The VIX calculation measures the 30-day expected volatility of the S&P 500 index. The components of the VIX calculation are near and next term put and call options with more than 23 days and less than 37 days to expiration. These include the SPX options with standard 3-day or third Friday expiration dates, and weekly SPX options that expire every Friday except the third Friday of each month. As I said, this Friday is not included. Once each week, the S&P options used to calculate the VIX roll to the new contracts and maturities. So these things are always kind of out there. As I said, 23 days minus 7 days. So you can have as little as 14 days, and then they go to the 37 days. So at that point, you can have as little as 30 days. But the most you have is 23 days and 37 days. And that ratio between the near and the far averaged out is actually what you get to calculate that. And the formula is actually in this thing. Don't let it bother you too much. They have some examples in this white paper that show you exactly how to figure it out. Once you figure it out, you'll have a much better idea of what's going on. And also how to look at the VIX and the associated products like the UVXY. And if you want to sit down in a spreadsheet, you can figure out when the contagion or contango is with you, the force be with you, and where you can sit on these things for a few days and not see very much of any decay. But it takes a little while. This is not something that you want to go out and start throwing money at right away. And there are 3, 4, 5 times a year when this will happen, and you can get into this product, make some fairly decent money, maybe lose a little. If you play it all the time, it's like Russian roulette. You'll blow your brains out. You need to have some kind of mathematical model under there to see when the chances of this thing going much lower are very light. So buy this only when your back is against the wall in this. I do not short it at the highs because it's very tough to tell how much higher high is in that product too. So anyway, we had a question. Anything else? Okay, 2260 on the S&P cash, 2.88 billion shares. Had a question in the email also about the SOX. What do you think about another stab at the SOX from here? Did pretty well the last time around on your recommendation. Thank Mike from Texas. Okay, Mike from Texas. I like the way this thing has so far not done much down here, but you got a narrow day out here. You don't have the kind of volume you would like. I don't know. A lot of overhead resistance in those semis. I don't think you're going to get anything out of this before the end of the year. I think this is something you want. If I had my druthers, this thing would go sideways until the beginning of the year, and then I would look for a play on this come around January 2nd or 3rd. And to see if there's anything else. That's it. Janet Yellen normally yaks till about 3:15 Eastern time, so that normally gives us about another 15 minutes before she's done. Look for the market to kind of give a sigh of relief that she's done talking, and then we'll find out what's going on. Next 2 hours with Tom O'Brien. In the meantime, sow when you can, not when you have to, and we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.